a little delay there because we had to make sure Jimmy was fully dressed. If none of you know what I'm talking about, Jim Iuorio, Managing Director, TJM Institutional Services, one of the most widely seen CNBC contributors, really good friend of mine. I've known Jimmy, got 26 years, I think, somewhere in that range. Jimmy had a spot on CNBC where Becky kind of teased him a little bit about the show was over, right, Jimmy? I mean, we're not live, but Jimmy was at his home as he is now, and he was in his shirt and he had no pants on below. And he stood up and the control room saw him without pants. So we don't need to dwell on that. It's on Jimmy's Twitter. If you guys want to see it, it's pretty funny. Jimmy, give your Twitter now so people can look at it if they want.
At Jim Iuorio, JIMIUORIO. And I'll tell you this, that I, as a general rule, I tend to wear the minimum amount of clothing required. So I'm not going to even suggest if I have or have not pants on right now.
Well, it's funny. You actually inspired me. I just had my cousin text me and say, your viewers want to know if you're wearing pants. So I do. Can you see? I have pants on.
Oh, good. Okay, good.
Yeah, but it's an inspiration from you. It's not something I normally do. Normally, I wouldn't have pants on either. So Jimmy, macro story. We went over the headlines with everybody already. Don't need to do it again. We've got no, I'm about to do it again. You know what's going on. I'd like to get your view on the jobless, whether there's going to be an extension of the 600 or more, if that stuff's going to get done, because I know you're a Fed watcher and that makes you a government watcher, but not a political opinion. Do you think it'll get done? And if so, is that part of why we're coming back a little bit today?
Right. Well, that's what I was just about to say is, regardless of what you and I think, it seems like the market thinks it's going to get done. And I think that's one of the reasons that the stocks are hanging in. It's one of the reasons that the dollar is still cratering. And by the way, everybody seems to be talking about gold and silver. And I've been talking about gold and silver for months, as you know, but it's really more of a dollar trade than everything else. And the dollar is, cratering relative to its movement over the last few months. So that's really the trade. So to answer your question, yes, if the market tells me they think it's going to be done, then I believe it's going to be done too.
So Scott Bauer said that he believes this is the sell-off we had Thursday, Friday is a little bit of profit taking. I don't see us robustly coming back right now. I mean, as we're talking, I'm looking at the Dow only up about 16, right?
Right.
So you've got the NASDAQ, I'm looking right now up about 1%. Was that profit taking on Thursday and Friday in your view?
I think so. Last night when I wrote out my Sunday notes and you read them, what I worried about was the disconnect between gold and silver and the stock market that began on Thursday. Because
before you go into that, let's put up your chart. Let's put up that Jimmy chart one so you could talk about that with the chart on the screen, because you sent me a really nice screenshot of that. So it's up on the screen now.
Cool. So my belief when that began to happen was that we could be in for some trouble, because I believed that was telling us that the Fed's response to this and the government's response to this have limitations in risk assets. And it seemed to me that there was somewhat panic buying in gold and silver, and that was going to continue. And then I thought that, and it all starts with the big six names in the NASDAQ. When people start selling those because of market position is huge, and that trade could have been huge to the downside. But now we come to this morning, and maybe it's the sun coming up, but I look at the way we've traded and handled those things, and I think it feels pretty good. Also, Goldman comes out with a piece talking about the weak dollar is going to attract $300 billion of foreign investment into U.S. assets. And so when Goldman says something like that, people feel good about it. The market's telling me there's going to be a deal met and extending benefits. So to me, I think the stock market looks okay. Now that will all change with me if the stock market, if the S&Ps trade below about 31.85. But until that point, I am relatively bullish. And you're going to see from the trade I'm going to give that it's a very, very conservative bullish expression. So it's not like I'm going to just be like, all in like some cowboy buying it, but I'm still a little bit bullish.
So it's funny. Normally, I don't like to spend this much time on the, I do like spending time on gold, silver. I love the commodities. Normally, I don't like to spend that much time on currencies, but I think they're critical right now. So same question to you that I posed to Amelia. Goldman says that, it's not you saying it, it's Goldman that says it in that note. And I saw that note, that's going to track money into the US. The original thing I learned when I was learning about currencies 27 years ago was that when you buy a currency, it's like buying a share in that country's economy. If you look it up on investopedia.com, which I use a lot, it's still there, right? Do you think that flies in the face of what Goldman said? If you believe that as the NBER has said, that we're already in a recession.
It's so funny with currencies, like you said, because there's always the two-sided arguments of whether it's good or whether it's bad, and whether the movement itself is being driven by good or bad things. So you see the dollar weakness, and the dollar is the world's reserve currency. I don't think that that's going to change. I think that that's the worry, the far-reaching worry of the dollar, like there's going to be some sort of cataclysmic event, I think is probably not even in the picture right now. But the fact that we've broken so hard is definitely the world telling us that there's a lack of confidence in how far these policies can go. With the Fed's doing rates, the government just spending like a drunken sailor. So that's what the market is telling us is a very negative thing in the commentary of the United States. And the euro is leading share on the upside, and the market's telling us that they're further along and better suited, I guess, to recover their economy post-pandemic. So what I see is bad, but then Goldman coming in and giving the silver lining, I think is a nice reminder to people that it's a double-edged sword.
So let's switch gears then. And before I do that, I do want to tell people that the CME does have the micro FX futures now that are 1/10 the size of the other contracts. It's a very good retail product. You've got euro, you've got yen, you've got pound, Canada, Australian dollar, and Swiss, all of the available in the micros. But I want to switch to your trade because I think that's critical for what's going on in the market right now. We're up a little, we're not up a lot. Last show, you did a broken fly. That made money. You're looking at another broken fly now.
Yeah, if it ain't broke, don't fix it. And I don't mean to bore people with a similar type of trade again, but these are the trades I've been having the most luck with on the upside. Because again, as I say, I want to find my risk. I want to be able to sleep at night. So one of the things I have on, and I have a few things on for upside. It's the week 1 August. So that expires August 7th, a week from this Friday. The 3250, 3300, 3335 call fly. So that's buying the 3250, 3300 call spread. So you're buying a 50 wide call spread, and then you're selling the 3300, 3335 call spread. So you're buying a 50 wide, you're selling a 35 wide. So you have like 15 ticks residual in case it flies through the upside. You're not going to lose everything you put out. I bought it for 12 ticks. I actually got it a little better than that, but just to round it out, 12 ticks is $600. So $600 to make $1,900. That's making $1,900 if it goes to 3,300 and you covered at that. When you trade flies, that is almost never going to happen. I have certain like little rules on flies. Like if I double my money in the first third of the duration of a trade, or the first even a little longer than that, I probably would just take the double and look for that other trade, because it's really it's folly to try to wait to capitalize 100% on a call fly. But again, so a regular, you got to think of a regular call fly, you're kind of pinpointing a spot. And I know you know this probably, but in a call fly, when you start weighting it different ways, it expresses slightly more bullishness than a regular call fly would portray for me.
So when you say you're risking 600, that's the risk. To make 1,900, you're saying that's just like the textbook definition of the risk and reward on it. So, and I like that you go into detail like that. Explain people, so people will hear call fly, people will hear call condor. Just take a second and explain to people what the difference is.
So a call fly is literally like an equal weighted call fly, equal distance. Let's say the 3250, 3300, 3350, which is not the one I have on, but that's a 50 wide call fly. And you would make your most money at 3,300 if it goes, because that you're making all you can on the first call fly and not losing any money on the second call fly. A call condor separates those middle things. So you're buying, for instance, you'd be buying the 3,250, 3,300 call fly, and then selling the 3,325, 3,375 call fly. So it would be a 50 wide call spread condors, buying this, but there's 25 ticks in the middle that anywhere in that range, you could make the full amount of the bottom call spread. Now, what's going to be is that you're going to pay more for that. I mean, the market, is relatively fairly priced on most things. So it's not like you're going to get a gimme here to have that 25 tick range for maximizing your money. You'd have to pay out for it.
Is there volatility adjustment when you do these trades?
Yeah, I mean, there is. It's not huge because you're buying and selling. So I don't care that I do these types of trades in any sort of volatility environment. But then, if it's a high vol environment and you are doing a broken fly that's more bullish, you're going to be paying more for that. But again, for equal weighted flies, I don't worry about it too much because you're buying and selling volatility.
Your full-time job is at TJM. So these are kind of good trades for people who are like, you know what, I want to do something today because I have an opinion but I got to go to work. I got to go to my accounting office, or I've got a trial today if you're a lawyer. That's good for that kind of person.
This is exactly why I do it. And you hit upon it too, because I love to trade and I trade every day and I day trade often too. But I prefer like 2-week trades because you can do that. You can set it aside. You can go back to the other things you're doing. And what the other things you're doing, I'm working with clients too. I'm not just always managing my own stuff. So there could be hours at a time where I'm looking at clients' things and not even looking at my own things. So this is exactly, put it right in the head. The most you can lose in this is $1,200. I mean, is up $600, 12 ticks, and you have 2 solid weeks to do it. And it doesn't require that much management. Now, as we start to get closer, the fun part is the management. Like I said, we're not going to take it to 3,300 and plan on having that settle on that 2 weeks from today and making the maximum. That's just unrealistic. But as we get closer, you have to put a little more time into it.
So Jimmy, real quick, you guys at TJM don't really take individual retail accounts. E-Trade does, by the way, our sponsor, but where can people find you? Your Twitter feed is entertaining as well as informational. So is that the best place for people to kind of interact with you?
That's the best. That's for interfacing with the public. That's what I've been putting my most resources into right now is at Jim Iuorio on Twitter. And each day I put out the things I'm looking at. Remember, again, I'm underscoring this. I don't give advice to anybody because I don't know what people's risk parameters are. I don't know how they're set up. All I do is I tell you what I'm looking at and why I'm looking at that. And then everyone can make their own decisions. That's what I do all the time.
Trade examples. That's what you're giving out.
Exactly. Yes.
Jimmy, thank you again for being here. We always love having you on the show, and we're going to keep having you back as long as you'll have us. Jim Iuorio, follow him on Twitter because it is absolutely informational and hysterical at the same time. Go check out that Becky Quick video, man. Go check that, Becky. We're not going to ask you to stand up, buddy. But thanks again for being here, man. Jim Iuorio, Managing Director, CNBC contributor, TJM Institutional Services. We'll be right back. One more quick break. We'll round out the show with Mike Arnold, who's got some very specific trades, very specific charts to show. He is my business partner and friend of multiple years. We will see you guys after this break. Stay with us.